Getting ready to buy or sell a home in 30, 60, or 90 days? Then check out BundleSelect.com to find out how you could save 20% or more on your entire transaction. Save on real estate, lending, and title. With BundleSelect.com, technology and a personal concierge are at your service to save you time and money. Bundle Select's hand-picked team of experts will compete for your business, so you'll save thousands of dollars by bundling all of these services. BundleSelect.com gives you all the control, including using your own realtor. I'm Joe Kuchera with Real Estate Radio Live, and I have been on the radio educating consumers for years. By bundling services like real estate, lending, and title, you could save tens of thousands of dollars. Act now, and this new model could save you money on your move, lower your interest rate, or cover your closing costs. Visit BundleSelect.com. That's BundleSelect.com.
The estimated minimum savings are based on a comparison with a national average. Individual results may vary, and the estimated savings are not guaranteed. Bundle Select Inc. is a licensed real estate broker. California Bureau of Real Estate Broker license number 004666902.
Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Kuchera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Kuchera.
Welcome in, Joe Kuchera with Real Estate Radio Live. Thank you for those that are tuning in, watching us streaming live on Facebook. Always appreciate that as we continue through the week. Just a reminder, we typically do the podcast on Tuesday, Wednesday, Thursday, unless we have some special guests. Sometimes we have Jack Russo in on Friday. So just for planning purposes, if you're watching us, if you're following us streaming live on Facebook, we're typically, again, going to be doing this on Tuesday, Wednesdays, and Thursdays. Each week we try to post it a little bit in advance. For those that are following the show, again, thank you very much. For almost 8 years, the focus has been education and information. We'll continue to provide that for you, the consumer. And the best way to follow us is really, obviously, we love to have those that are following us on Facebook and social media, but more importantly, be sure to download the podcast. That's where you could follow the show, listen to the show at your convenience, when it's convenient for you at any time. You could download the podcast at iTunes by just going to iTunes and typing in Real Estate Radio Live, or you could always just go to RERL-1513-Rates, and you could just type in, look at the podcast, download there, and get any information you want. Also, just a reminder, on our website are a lot of resources. I forget to remind people that are listening and tuning in. On our website, there are a lot of resources for real estate agents. If you need help with tax planning, CPAs, financial planners, there's legal. If you need a real estate attorney, or if you need some other legal advice, there's some information there on the website. So be sure to check that out at RERL-1513-Rates.com. If you're trying to reach me during the week, 408-838-9060, or you could always email me, Joe, at RERadiolive.com. Today's topic, I'm going to talk about a couple of different things. One, rates have dropped. The reason I wanted to talk about that a little bit today is because it is a rarity in a market the last several months, actually the last 8 or 9 months, we've had rates moving up, and the trend has been upward for quite a while now. So this is really I won't say a large, but this is a significant drop in rates over the last week or so that I've seen in some time. So I wanted to throw that out, make sure you knew, for those people that are maybe out in contract, you're about ready to get into purchase on a contract, or you're seeking a pre-approval, or even those that are potentially looking for a refinance. The rates, of course, have gone up, and they've been up on a higher level recently, but again, they've come down in some cases an eighth to a quarter in rate, and that's pretty significant, especially on a number of different ways to look at this. So if you're out getting pre-approved for a purchase, and you're right on the bubble of maybe being pre-approved for a certain amount, with the rates coming down a little bit, that could mean a significant difference. You could then have more buying power to more purchasing power. So be sure, if you are out getting pre-approved or you need some assistance in that area with pre-approvals, with the rates dropping a little bit, that could make a big difference in what you're approved for and what you could qualify for. So make sure you check that out, whoever you're working with. On financing, as usual, I'll throw out there, most people know this, but I help people for the last 18 years, residential financing. That's what I do, amongst other things. Of course, this podcast and another company we started. But I help people with residential financing. So if I could help anyone with refinances, purchase financing, there's a lot of different unique things we do. We do bridge loans, cross-collateralization, which means we're able to cross other properties, other assets, other land to make transactions happen. In some cases, there's a lot of thinking out of the box with the type of financing that's available. A lot of people don't know that. We could help you with all those things. So with the rates coming down a little bit, I just want to, again, get the word out there. If you've been hedging on a refinance, the one thing that I see a lot of people doing right now, and I don't blame you, I'm seeing some refinances for people to do cash out and remodel and add on, or doing some projects they haven't done for a while. The reason why this is popular right now, two reasons. One, there's been this huge equity run-up, as people know, in the property value. So several years ago, your home could have been worth $1 million. Today, just within the last year and a half, the equity in your home could have grown 15-20%. Your home now could be worth $1.2 million, just as an example. So what does that mean? You have more buying power, or more leverage on your home if you want to take money out to do a remodel or an add-on. The reason why, and I'm not advocating that everybody go out and do this, but I'm going to talk about some things today on what could trigger you to be interested with the rates with this little drop. I don't know how long it's going to last, really. It's been a nice little run. So we're in this little bubble period. I'm not sure if it's going to last a couple of weeks, 30 days, hard to say. But if you are in the market for a refinance, now's the time to jump in and do it. And I could help you with that. Of course, contact me if you have any questions about that. So the one thing I want to talk about in relationship to lower rates and the timing is that if you are in the market to remodel your home, here's the reason why it's a great investment, really good investment around here in the Bay Area. Now, it depends on how long you've been in your home, for sure. But think about this. I'm just going to give you some examples. Most of the areas now in and around Santa Clara County and Silicon Valley, it's hard to find a lot of areas that are less than $1,000 a square feet now. I know it's crazy to think about. But if you did $1,000 a square foot, my point here I'm going to try to make with you is that if your home, it's in Willow Glen, it's in certain parts of San Jose, it's in Saratoga, Los Gatos, Palo Alto, Los Altos, it could be, $1,100, $1,200, $1,300 a square foot. Here is the thing to think about. If you're going to be in this home for a while, or if it's a good investment, or if it's an investment, a long-term investment for you, think about this. If the going rate right now is 1,000 square foot, let's just do a little quick math here. If it's 1,000 square foot, the going rate on your home, and let's just say it costs you $300 to $350 a square foot to remodel or to add on. Let's just say it's $400, and it could be in some cases. Let's just call it a number, $400 a square foot to add on 1,000 square feet. You do the quick math, that's $400,000. It's a lot of money. It's a lot of money, but think about what the return is. Not that you would turn around and sell your house right away, but you just invested $400,000 in increasing the square footage on your home, permitted square footage, 1,000 square feet. That is worth an additional $1 million potentially. I mean, think about that. I know it's hard to understand, and it's hard to kind of wrap your head around and understand, but these are good investments if you plan to have your home long-term. And if you look at it as an investment, I'm not suggesting everybody go out and pull money and remodel, but I'm telling you right now is a wonderful time. If you've ever thought about adding on, remodeling, spending money, putting it back into your investment, and you plan to own it for a while or be in it for a while, it's a great investment. It really is. Where else are you going to get a return on that kind of money? Seriously. Think about it. Sit down, put the numbers together. Meet with contractors, meet with people to find out. You add a cost of $300 to $400 a square feet, but then you turn around and you could sell it, or the value is, $800 to $1,000 a square foot. That is a huge return. Now, you're not going to get that return right away because it's all on paper until you sell it. But that's a great investment. That's a great investment in you and your home and your property. and your lifestyle to add that. Now, when you add certain landscaping, and they call it hardscaping and things like that, it's a little harder. You can't really, it's hard to put to quantify and put a number on landscaping, although it's very expensive. Good landscaping is very expensive when you add pools, water features, different things like that. It's super expensive. It's hard to quantify. It's hard to put a value on that, though, because it's a little bit different than adding permitted square footage to your home. So it's a lot different. But I would encourage you to think about this. The other thing I want to talk about before this first break is, with the rates being still reasonable and the rates are probably going to go up in the next couple of years, I'm a big fan of these granny units, these detached units that the city's allowing now. If you haven't heard, I've done a show on this several times. The city is now advocating that if your lot, I believe it's got to be over 5,500 or maybe 6,000 square feet, you could add up to 800 square foot detached additional unit on your property. Now, it's proportionate to your lot size, so you have to look up the numbers. And my point behind this is, you're not going to be able to add a 800 square foot unit on your property if your property is only 5,000 or 6,000 square feet. It's proportionate. So you'll have to look up those numbers. I don't have them right in front of me. But this is another great investment. I'm in the process of getting the unit that I have on my property permitted for this reason. It's a 400 square foot unit, and you get it permitted. Now that square footage could be added to the square footage and given value to your property. This is something else to really consider if you're thinking, I want to reinvest in my home, I need some additional space, maybe I could set up a in-law unit or a granny unit, they call it, for parents, grandparents, children, even renting it out. Some of the studies, some of the stuff that they've done down in Los Angeles County, it's been remarkable. They added over 10,000 units, I believe, over the last 4 or 5 years. And that actually not takes care of, but that puts a little bit of a dent in the housing shortage, believe it or not. If you have people that are putting units in their backyard, 600, 700 square foot units, and you're renting them out, you're creating housing opportunities for people, and that's what the city wants. That's why the city of San Jose has now really endorsed this, and they're encouraging you to add these units on your lot. So I would say right now, jump on that opportunity if you think it's a good idea for you. Here's the reason why. There may be a time in the next couple of years where the city is not going to want you to do this, and they'll fight you. A while back, the city didn't want anything to do with this type of thing. So you're in this window of opportunity right now. If you're thinking about adding a granny unit or another unit on your property, it's a great idea. Find out the costs, see if you can get it structured, see if it makes sense. Again, remember, this is an investment in your property, and right now, with the square footage, the cost of square footage in most of these places in Silicon Valley, you're going to get your money back. It doesn't mean it's a good investment right now because it's on paper, but down the road, it definitely will be. So it's really something to consider. Before I wrap up this segment and come back to segment 2, again, rates have come down in the last week or so. I'm going to encourage you, those people listening, if you're thinking about refinancing, try to get in and jump in and do it now. Rates are a little bit better than they've been for several months, almost a year. Number 2, if you're thinking about remodeling, adding square footage to your place, it's a great time to take money out of your house and do that because of the rate of return and the cost per square footage, what's going on in the marketplace right now. It's a great investment if you plan to own your property for a while. Thirdly, if you want to add one of these granny units or detached units in your backyard or on your property, it's a great time to do that too for the reasons I just suggested. Rates are down, take some money out, reinvest in your property, and you'll be happy you did it. I'm telling you, 5, 10, 15 years down the road. All right, we're going to take a quick break. For those watching on Facebook, stick with us. I'm going to just take a real quick minute, and I'll be back to continue the show. This is Joe Kuchera with Real Estate Radio Live. I'll be back in just a minute. Thanks.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com.
Getting ready to buy or sell a home in 30, 60, or 90 days? Then check out BundleSelect.com to find out how you could save 20% or more on your entire transaction. Save on real estate, lending, and title. With BundleSelect.com, technology and a personal concierge are at your service to save you time and money. Bundle Select's hand-picked team of experts will compete for your business, so you'll save thousands of dollars by bundling all of these services. BundleSelect.com gives you all the control, including using your own realtor. I'm Joe Kuchera with Real Estate Radio Live, and I have been on the radio educating consumers for years. By bundling services like real estate, lending, and title, you could save tens of thousands of dollars. Act now, and this new model could save you money on your move, lower your interest rate, or cover your closing costs. Visit BundleSelect.com. That's BundleSelect.com.
The estimated minimum savings are based on a comparison with a national average. Individual results may vary, and the estimated savings are not guaranteed. Bundle Select Inc. is a licensed real estate broker. California Bureau of Real Estate Broker license number 004-66902.
Welcome back to Real Estate Radio Live. For more information on today's topic or guests, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Joe Kuchera.
Welcome back in. Joe Kuchera with Real Estate Radio Live. Thank you for those following the show on Facebook who are streaming live every day. Again, just a reminder, we try to do the podcast on a regular basis. Tuesday, Wednesday, Thursday, we try to get started at 3:05 to keep it consistent. For those that missed the show, please make sure you download the podcast. That way you can listen to the show anytime at your convenience. You could do that by going to iTunes and just type in Real Estate Radio Live, or you could also go to RERadiolive.com, that's our website, and download the podcast there. The topic of the show today, the first part, I want to talk about the rates that have come down in the last week or so. Take advantage of those right now if you can. We're getting a lot of activity right now. Purchase market is really picking up. So this segment, I'm going to talk a little bit about the buyers. And the buyers, do they still have a chance in a market like this? You know, it's a really challenging market right now. Most of you know that if you're in this Silicon Valley market, we've had low inventory, shortage of inventory. So these poor buyers are struggling. They're trying to put in offers. There's multiple offers. Homes are getting bid up, sometimes 15, 20, 30%. It's crazy. The homes that are getting bid up all over the place, it's just really crazy for buyers. I mean, it's great if you're a seller, and it's great if you're a seller and if you're moving out of town or out of California. It's really good. But if you're a seller and you're still going to get back into this market, it's still pretty challenging. So I'm going to talk a little bit today about buyers. If you've been on the fence, if you've been discouraged, I'm going to really encourage borrowers to get back out there and go at it. The reason why I'm seeing more and more property come on the market, and I think we're going to get more and more property. I think in the next 60 to 90 days, certainly in the next 45 to 60 days, you're going to see a lot more property come onto the market, and that is going to open up more opportunities for more buyers. So if you're a buyer and you've been frustrated, or you're on the sideline now and you just threw your hands up and you thought, you know, I'm done with this, I'm frustrated, it's a ridiculous market, get out there and stick with it. Try to really stick with it. Make sure you're working with a qualified realtor. In a time like this, ladies and gentlemen, I can't stress enough, make sure your real estate agent is top-notch and they know what they're doing. The reason why is it makes all the difference in the world in a market like this. If you're in kind of an average market and it's not that competitive and, you know, it's easy to get a place in and out, all those, it's different. But when you're in a market like this, boy, you better have a realtor that really knows what he or she is doing. Don't make the mistake and use a real estate agent because it's a family member or a friend, and I've used them for the last 30 years, and you know, I don't really know, I don't want to not work with this person. Take the emotional and personal stuff completely out of it. Believe me, this is a business decision. You've heard me say this before. I know some people don't want to hear this, but I'm not here to be popular. I'm here to educate and inform the consumers and give you my opinion. I work in this business, in this market, every single day. It's a tough market to buy and sell and finance. Make sure you're working with pros. Make sure you're working with people that know what they're doing. It is too much of a risk to be out there putting an offer on $1 million, $2 million, $3 million home and trying to sell that home, $2, $3, $4 million home, with someone that doesn't really understand what they're doing, or someone that's part-time, or doesn't treat this like a business. The same on the lending side. Make sure you're working with someone that could close loans on time. Make sure you're working with someone that will stay in contact, that will educate you, that will inform you and your team to give you each step of the way, what's going on, how you're going to achieve these goals. It's too risky to chance. It just is. I mean, think about it. If you lose out on $1 million, let's just say you're putting an offer on $1 million home, and you keep losing out and losing out and losing out and losing out, and there's this shadow of doubt in your mind, and you're wondering, why do I keep losing out, but I'm hearing other stories about people getting their offers accepted? Well, it's not always that easy. I'm not saying it's always going to happen that way. My point is, I have seen the difference in what good, qualified real estate agents represent people, and I have seen, percentage-wise, those real estate agents get their offers accepted more than other real estate agents. It's more than a coincidence that people that have been doing this for a while and understand the market, and they're going to bat for you every single day, it makes a difference. It really does. And in some cases, be careful with someone that's been in this business for years. Don't assume just because they tell you, hey, I've been doing this for 30 years, that they're the right person. Doesn't necessarily mean that. It really doesn't. Ask them about their strategies. Ask them about their marketing. Ask them how they use technology. How will they communicate? What happens when you get into contract? Ask good questions and expect good answers. You expect that. Consumers are becoming more and more educated and informed. You hear me say this all the time. I'm a big believer in it. The reason why we started Bundle Select is for this reason. It was driven by watching a market change drastically over the last several years, and you have a more educated, informed consumer. What does that mean? They want things better, quicker, more efficient, and more cost savings. They want those things. They expect those things. So we, in our industry, we have to work really hard at delivering those. And you've heard me say this before. All of us have to make the adjustments. Our business models have to change so we could adapt. And we could adapt to what the consumer's needs are, not the opposite. Consumers don't fall into the mistake and think that consumers are going to adapt and adjust to us. That's not happening. The consumers, we have to figure out what their needs are and what they want, and then we have to make our adjustments in our industry and the lending and real estate to take care of that. So buyers, make sure, first and foremost, you're working with someone that's solid, that understands the market, that's got a good chance to make those offers. Now, a couple little tips on that. When you're working with a real estate agent, I do this all the time. There's some things you could do that make a big difference. Whatever lender you're working with, when I'm working with buyers and the real estate agents I'm working with, they know that as soon as they put that offer in, we structure the letter as such, and as soon as they put that offer in, I get on the phone and I call the listing agent and I make the case for the strength of the borrowers that I'm representing and for myself and for the real estate agent on the buy side. I get on the phone, I call the listing agent, I tell them about the clients, the strength of the file, what they're doing, the strategies, close of escrow, contingencies, all those things. We have this conversation and make an introduction. A lot of times I will go meet them in person if it makes a difference or if they're willing to do that. I make that offer all the time. Another thing to think about and consider if you're working with your agent and you're the person that's doing your financing, have the person that's helping you with your financing, like myself is what I do. I always ask the real estate agents, hey, do you want me to go with you to make the offer? Do you want me to sit down at the real estate office or at the person's home or wherever it is? Do you want me to be there as a representative on the financing side as part of that offer? It makes a difference. It makes a difference when you go face-to-face with people and you have just a few minutes even to start and build a relationship. And you never know what things come up in a quick conversation and how a person could connect quickly. It happens all the time. It happens all the time. So as a buyer, if you're listening to this podcast and you're either thinking about buying or you're out there right now, number one, make sure you have a qualified real estate agent that understands what they're doing. And if you don't, question them. And seriously, this is your money. This is your livelihood. If you're missing out on an offer, think about this. If you're missing out on an offer on a home for $1 million and 4 or 5 months go by before you accept an offer or you get your offer accepted and you pay $1.1 million for that same house, roughly, not literally the same house, but maybe in the same area or neighborhood, that just cost you $100,000. That just cost you $100,000. Don't make the mistake. This is a business decision. There's a lot of money at stake. Ask good questions. Expect good answers from both sides, from the real estate and the lending side. Coordinate those things. It's too important. And in a market like this, I don't see it getting any easier anytime sooner. I do see more inventory coming on the market. So for those buyers, get back out there. I encourage you to get back off the fence. If you're on there, get off, get back out there and buy. My philosophy is this. If you plan to be in the Bay Area for a while or keep a property here for a while, regardless, it's always a good time to buy. For these people that brag about their timing and, hey, I sold everything in 2006 and I start buying again in 2010, don't always believe that stuff. It's amazing how people tell stories about how smart they were. And I'm not saying some people didn't do that or they're lucky to timing, but very few people could see that stuff coming. Very few people could see that stuff coming. So don't fall for that. What I'm suggesting is if you are in the market or you really want to own a property here, now, if any time, is a good time to do it. Here's another good reason. I really do think that in the next year or so, we could see rates even higher. And as rates go up, the cost of money, of course, that means the cost of money goes up. That means it's tougher to qualify. You're going to have less purchasing power as rates go up for some people. So seriously, get out there. I could tell you 15, 20 calls in the last couple of months, people saying, Joe, I'm getting off the fence. I'm going to go do this. And it's exciting to see these people make the effort. It is a lot of work right now. Believe me, it's not for a faint of heart. When you're out there putting offers, it's tough. You're going to miss out on some. You're going to be discouraged, but keep going because you will get that place and you'll start building equity and you'll start with an investment and you'll be happy you did it. So get out there. I encourage you. If I could help you at all, give me a call. Check in. Let me know. I love to help people get in their homes, especially the first homes. I think we forget about these people because of the way this market is, the move up, and it's so expensive sometimes. But it's really fun to get people into a home for the first time, and we're here to help you to do that. Make sure you're surrounded by a great team, and make sure that's all coming together for you. So buyers, last time, seriously, don't get discouraged. Make sure you have an updated pre-approval letter. The last couple things I'll remind you of, and the pre-approval letter is the key. If someone says, you're pre-qualified or do you want to get qualified? No. Make sure you're really clear. No, I want an underwritten approval. I want to be pre-approved, and I want an underwritten approval, which means when I turn on all my documents, I want to have an underwriter look at those documents and give me what's called a credit approval. Based on everything, you're approved with the exception of the property. So when you get a credit approval, we're looking at all your documents, and based on your income, assets, and strength of the file, the credit scores, we're giving you what's called a credit approval. And of course, then you're ready to go. You have a letter with your real estate agent, and you're out putting offers on property, and it's conditioned, of course, on the appraisal and the physical property itself. But that comes when you get into contract. So these things are really important, but I'm telling you right now, it's a great time to be out there to buy. It's still going to be frustrating, but as more homes come on the market, you're going to have more options. You're going to have more opportunities. I really believe that. And I do think here in the next couple of months, it'll be interesting to see if some homes are getting as many offers as they have been and getting bid up as they have been. I think it's going to be pocket areas. I'm even seeing some homes that are not getting bid up or getting really what they're asking or a realistic price, and they're not going much over. So it will depend on how they price that property going on the market for sure. So there's a lot of variables there. Anyway, get back out there. Don't get discouraged, those buyers. And if you're a seller, it's a great time to sell. I'll say lastly, if you're a seller, the thing that I hear the most, and I'll keep talking about it, if you're a seller and you don't want to sell your home or put your home on the market because you don't want to do that until you buy a home, we have a solution for that. We are helping people all the time now. This is a normal thing for us now to do cross-collateralized financing, to do some bridge financing, to do some alternative financing to allow people to put in non-contingent offers so they could go buy a house before they sell their house. It could be done if you have the right profile and the right situation. We could help you with that. All right, I'm going to duck out for today. Thanks again for tuning in. For those, again, always on Facebook, thank you for continuing to view the show, to share the show. For more information, you could always go to RERL-1513-Rates.com. Don't forget to download the podcast. This is Joe Kuchera with Real Estate Radio Live. Take care. Have a great afternoon.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Subscribe to our podcast. Discover more at RERadiolive.com.